Hey there, Associate Doc. It's Dr. Schick, an associate dentist with an enthusiasm for personal finance. Today, I wanted to talk about my reasons for my current asset allocation strategy. Just for reference again, I like to deploy 65% of my investment money towards a broad index of S&P 500 here in the US. So I use ticker VOO. 15% goes into bonds, ticker BND. That's a broad index of US bonds. 15% into international stocks, again with an index, ticker VXUS. And last but not least, 5% into cryptocurrency. And nowadays I'm picking Bitcoin as my selection. So first off, let's look at the 65% allocation to the S&P 500 index with ticker VOO. This fund again gives you a broad exposure to a diverse array of large cap US companies. Historically, all of these companies have delivered strong long-term returns. The S&P 500 captures a significant part of the US equity market and is often considered a benchmark for overall market performance, so you gotta at least have something tracking that. A big reason why I like the S&P 500 is there's huge growth potential. Equities or stocks have consistently outperformed other asset classes, especially in a growing economy, which we're theoretically in. So by allocating a significant portion to that S&P 500, my portfolio should kind of ride that growth potential as well. Next, we'll talk about the risk mitigation strategy by using bonds. So my 15% allocation into BND. This is to help stabilize my portfolio. This should reduce volatility, so balance my portfolio by reducing the volatility of the entire portfolio. Typically, if stocks go up, bonds go down. If bonds go up, stocks go down. So that's kind of the counterbalance here. And more than that, bonds tend to be less risky than stocks, and they provide consistent income through their interest payments. So again, just helping to decrease the volatility in my portfolio. The 15% that I'm throwing into the international markets with the ticker VXUS, this induces my geographic diversification. So by grabbing companies out of other countries, we're going to hopefully vary the economic conditions that are within my portfolio. Now on to the exciting part, the 5% that I'm throwing into cryptocurrency, specifically again, Bitcoin. This allows me to invest in an emerging asset class, insanely high growth potential. Cryptocurrency, as we all know, is insanely volatile. It can go up and down 20, 30% in one day. So by only having a small percentage, 5% of my portfolio here, my portfolio itself isn't going to have a significant drop in its worth, but there is a chance for significant gain should cryptocurrency keep raising at the rates that it has over the last 10 years. By having a small percentage of money in cryptocurrency, in theory, in 10 years, my investment portfolio could have grown substantially more than it should, with just a 5% allocation. So by hearing all of that, you probably are kind of understanding why I chose these different asset allocations. It strikes a balance between risk and reward. I do want a chance for my portfolio to keep going up and up in every year, but I don't want my portfolio as itself to be highly volatile. As we talked about previously, the best overall portfolios have very stable growth, so they're not volatile in their growth, and they ride the gains via compound interest. So the cryptocurrency is really my highly labile asset, where 95% of my portfolio should just be moving up 5, 6, 7, 8, 9, 10% a year and make me have predictable growth to gain compound interest on. Another huge advantage of the list that I have is that it's all passively managed. All of those things that I picked are passively managed ETFs. So there's low fees, there's no active management. I don't do anything. I can dollar cost average into those and slowly over time invest more and more money and really just shut my brain off now that I've picked them. So very passive management strategy here. Another thing I've alluded to several times throughout is that I have a very long-term focus. I want my entire portfolio to go up 5 to 10% per year every single year so that I can ride the compound gains, the compound interest. So I'm not thinking about putting all my money in cryptocurrency because I want to make a ton of money this year, then sell it all. No. This is my long-term investment strategy for 20, 30 years down the road when I'm going to be retiring myself. My overall approach blends growth potential, risk management, and diversification, which should align with modern portfolio theory, and I should have pretty predictable historical market performance. Again, that 5 to 8, 10%, that my portfolio will just grow every single year until I retire. So just remember, as an associate dentist, your financial future depends on the decisions that you're making today. So by applying these principles into your investment strategy, you could potentially set yourself up for success. So join me, please like and subscribe to my Educated Associate channel, where I'll continue to put out actionable advice. If you have any questions, comments, concerns, please write them to me. I always get back to you. Let me know what I missed, what I didn't miss, what you'd like to hear more of. And as always, stay drilling, my friends.